I appreciate the fact that you guys are making profit already from what we've shared so far. Somebody posted GU. He made about 4R on GU. Somebody just before I came up posted AUD Chef. He said he trades BTMM most likely, and he's used to seeing M and Ws. But just imagine if you can keep to that rule. I will only trade from an order block. I don't care if it is M and W. I don't care if it is X and whatever alphabet. If you trade from an order block, you put yourself in a situation that when you are wrong, you know on time. And if you are right, well, you are right. The problem most times is that when we're wrong, we don't know if we're actually wrong. We still feel like we could be right. And then we try to manipulate some things. So I'll give you an illustration now. If there's an order block at this lower line and an order block above, and you take your trade somewhere in between, right? What you're doing is that you're putting yourself, if price goes up and you're willing to buy, or you are going in for a sell, and price is pushing upwards, your system is not telling you that you are wrong yet, right? Because you need to break this level to be wrong. If you were selling and price is buying, but if you were selling from somewhere here and price violate this, you know on time that you are wrong. And if your system gives you a way to catch the buy, then you go back and claim your money. But if you are in between somewhere here, you practically, you can't. Sometimes you look like you're buying, then price begins to sell, then you jump in for the sell, then it looks like it's buying. Price can do anything it wants to do in between. But we expect price to do basically one thing in the other block. And if it does the opposite, we say that other block has been violated. And once another block has been violated, our next action is clear, very, very clear what to do, right? So I don't care if you use BTMM. In fact, one of the first thing class, the previous first string class, the one that I just concluded, we taught how to use BTMM, and I think I have that video free on YouTube, how you could use straight BTMM from other blocks, right? Notice, guys, just notice AUD card, AUD chef. Just notice AUD chef. This is another block, price trades into it, it buys. This is another block, price trades into it, it buys. At the recent buy on AUD chef, you can clearly see from this flashcard the W, right? So if you trade BTMM, well, this is a type 1 W, right? This is a type 1 W. ICT traders will say this is like a Judas swing. Type 1 W, and boom, moves. If you use BTMM, yesterday I mentioned you can have just one moving average, right? And I was saying you could use 20 or 13. BTMM traders will be used to 13. Let's assume that the moving average on this chart is 13. A close above the 13 is your entry. Now notice this will give you an earlier entry than LSB in this instance, not in all instances. So guys, the idea is trade from an order block. If you are already used to a trading style, stick to it. Just ensure that the signals you pick eventually are the ones emanating from an order block. Then you put yourself in a better position to have high win rates, right? So I wanted to discuss other entries today. I doubt if we'll be able to get to that point because I mentioned I was going to discuss, break down, demystify other blocks for you guys. Other blocks, as the term is being used by some gurus on YouTube and the internet now, looks like something that is new. However, if you go through the very popular candlestick Bible, you will discover that prior to most of the things we so appreciate now, people have been making money studying candlesticks, right? And some of the names we have, some people sent some charts to me, and I see some names like WS. I don't know what it means, but when I discuss with them, I discover that it's actually an order block. Somebody just found a different name for an order block again, right? So 5 years from now, ICT concepts may not be too popular, and somebody else will call order blocks somersaulting block, and it's become very popular. Everybody talking about somersaulting blocks and the likes. It can be anything, but we're going to try to demystify that tonight by helping us see some candlestick patterns. I'll be starting with the very first candlestick pattern called an engulfing candle. Right? Here we have an engulfing candle. In this box, we have an engulfing candle. This, by the way, is a bearish engulfing. When you see a bearish engulfing candle, it simply tells you that sellers are in the market or have taken control. Oh, somebody said Wally blocks, bankers block. Thank you so much. Very soon there will be so many things, right? And one thing you guys need to know is that nobody pays you. Nobody pays you, or your brokers per se do not pay you for knowing these terminologies. We are paid for applying them and applying them properly. Of course, with other psychology, risk management, and the likes. So whether it is Wally block, bankers block, whatever it is, they all stem from basic candlestick patterns. You combine these candlestick patterns together, then you can have even your Y curve, even your whatever it is, you still need candlestick patterns in them. So when we see a bearish engulfing or a bullish engulfing, it indicates that sellers or buyers, respectively, are in the market. Now, the rule is this: when I see a bearish engulfing, there are two ways I can trade the bearish engulfing. If I see a bearish engulfing, I could take the trade from the close of the bearish engulfing, or the low, as the case may be in this case, or I could take the trade from the body of this candle that was engulfed. And if you're an ICT person, that will mean you're waiting for price to close the fair value gap, and then you sell. But an engulfing candle is a sign of decision. The market has made a decision. When the market makes a decision, you flow with them. If you've been, I have some other friends I do business with, the rich you might have seen some of the videos on YouTube, and we take a class there, and one of the slogans we like, repeating, is that we are paid to wait. Most times, retail traders trade under the fantasy that their indicators or strategy can predict what will happen. I tell you the fact, very few people would have predicted that Capitol Hill House presently now would have been invaded by Trump supporters. The effect it will have on USD, how would you have predicted that 1 hour ago, 2 hours ago, right? It's difficult to do that. But somebody said taking the engulfing could be dangerous as price can go back the other way. So will it be safe to wait for candle close? Price, okay, if you say taking the engulfing is difficult because price can go the other way. Whatever you want to use, whatever method you want to use, price can also violate it. So somebody asked a question that on a scale of 1 to 10, right? I'm sure you guys understand what I was trying to say yesterday. Whatever you say, if I say take the trade from this point, And somebody said taking from it is difficult, it's dangerous because price can go the other way. If you wait for price to come to this other point before taking the trade, price can still go the other way. Price will do what price will do. Whether you wait for it at point B or wait for it at point C, if it was going to buy, it's going to buy irrespective of where you place your entry. And that is the mentality we're trying to clear off when we do our fostering program. That backtest and ensure you have a strategy with an edge. But trying to predict what price will do simply because you took a trade isn't going to help you, because you can't do that. Right? So if 50% is what you like, fine. But well, I'll leave the comments for now so we could conclude what I was trying to say. Here is an engulfing. Of course, if you have been following this webinar from Monday, you would know that we prefer to take the trade when it comes back to this line, right? That is when we prefer to take the trade. Why? It gives us smaller stop loss and all the likes. I'm just explaining how other engulfing can be traded, right? We prefer taking the trade when price trades back to the candle that has been engulfed. Now, this candle here is called a bearish engulfing candle. This same candle is nicknamed an order block in some quarters. This same candle is nicknamed a supply zone in some quarters. It has several names. Whatever it is, some people online even call it strong OB, SOB. It is still an order block, right? We're talking about an engulfing, and that is all. That is the traditional name. Same thing for a bullish engulfing, right? So let's leave that. We go to the second type of candlestick. We have a candlestick we call the railroad. When you have a railroad, you have something that looks very similar to this here. It's sweeter if the wicks are almost the same thing, right? But for a railroad, you want to consider mostly the body of the candle, the open and close, right? It doesn't have to be razor precise in the sense that they don't have to be exactly the same size. But you could see that these two candles are basically almost the same, right? So when you have a railroad, it is a sign of indecision. If you go to a higher time frame and you see a railroad, on a higher time frame, a railroad will be a wick. It will be a shadow or a wick or a tail, depending on what nomenclature you want to use. Because what it means is that sellers sold down, buyers bought back up to almost the same point where sellers sold off from. That is an indication of indecision in the market. How do we trade railroads, also known as tweezers? How do we trade them? We box them off from week to week, right? From the week to the week. You box it up from week to week. And you wait for price to make a decision. The decision is a close outside your box. If price closes outside your box, if it closes above, note the word close. If it closes above, then we are buyers. If it closes beneath, then we are sellers, right? But we don't use this just anyhow. We want to use this within the framework of an order block, meaning that in a higher time frame, we would have predetermined our buyers. In this case, let's assume our buyers is a buy, right? So we would have predetermined that we want to go for a buy. Now watch this. We have our tweezer or railroad, we box it up. When price closes above the railroad, it tells us we are now ready to buy. What do? We set our buy limit, some few pips above the breakout. Price comes to it, we buy. Price comes to it, we buy. This will most likely give us what we want. Three R, right? 1:3. It will most likely give us what we want, right? Now notice we're not doing anything fanciful here. We're just using what I call candlestick anatomy. How candlesticks are formed. You understand how candlesticks are formed. You are going beyond just the color of the candle, and you are trying to understand the behavior of the fear and the greed factor that causes these candles to print the way they print. Remember, candlesticks or these candlesticks or price movement is well, as written by almost every book in the internet, is that what drives price is fear and greed. So here we have a tweezer, and we are predisposed to buy because we are in an order block, a bullish order block for that matter, right? If you don't want to use an LSB, this is another method, right? Price breaks through it. It tells you that the buy has started. However, if you've been trading with us for a while, you know that we love doing things like this. Price has bought, we know price is going to pull back. Most times, then we'll buy. If it pulls back again, then we'll buy. At this point, we have a tweezer, right? We get a breakout. We're anticipating a pullback. Then we continue with the journey, right? Now, what brought us here? We said we're trying to discuss, break down, demystify order blocks. This bearish candle, right? We would have called this bearish candle an order block, as in price traded through it, therefore is another block. So if this was a daily time frame, we would have been anticipating price to trade back into the bearish candle, and then we buy. So a breakout occurring from a tweezer is another order block. Treat it as an order block. My own definition of an order block, right? Nobody is really an authority, right? So somebody saying, are you saying we don't take this candlestick trades unless it's in an order block? Precisely. However, depending on how you want to trade, if you trade candlestick patterns, and I'll be showing you some mind-blowing things towards the end of this webinar. We might go some minutes beyond 1 hour, right? You could practically, like I told you guys, right, that what we'll be doing starting from next month or thereabout, you could practically place a line on your chart or a zone on your chart, and you set some conditions to this zone, and it will tell you if you should buy or sell. You don't need to look for liquidity. You don't need to look for fair value. You don't need to look for anything. There are guys making money from trend lines if you know how to keep to the rules. So let's flow, right? So I've mentioned two, an engulfing, a tweezer. I'm going to mention another one, and this one is called the pin bar. The pin bar is more or less, it has another name called like the hammer, right? And here is a very good example of a pin bar. This is a very good example of a pin bar. When you see a pin bar, it also delineates an indecision in the market, right? The same thing with a doji. So I'm explaining two things together now, a pin bar and a doji. Now, the doji has broad uses. There is the Greystone doji, there is the hanging man or whatever they call it, there is the shooting star, there is the spinning top. All of them are variables of dojis. And if you want to identify a doji or a variables of hammers. You just want the body. In fact, I don't need to define. You go read it in the internet, on the internet, right? So we can have time to move on. When you have a doji like this, it's also a sign of indecision. All you need to do is wait for price to break outside your doji or your hammer. If it breaks to the upside and you are in a bullish order block, that is an indication to buy. Put your limits at that point, stop loss beneath, and you're in a buy. Simple and short. No big stories. Candlesticks alone. The next one, so I've explained engulfings, I've explained dojis and tweezer and pin bar, which is the hammer, right? I'm going to explain another one, and it's called the harami candle. Basically, the name I just forgot the name. I just slipped off my memory now. Yeah, I'll use the harami for it. Inside bar. Thank you so much. The inside bar, right? Let's follow this thing closely, right? The inside bar. Now, the inside bar is the opposite of an engulfing. Is an engulfing happening the opposite way around, right? So this, let's come down here. This candle here is a bearish engulfing, right? This one here too is also a bearish engulfing. However, if the bearish, somebody's writing on my screen, Taiwo, if the bearish, okay, let's just look for an inside bar straight up. Okay, so here we have an inside bar. Notice this is not a bearish engulfing. The bigger candle is to the left, and the smaller candle can, find full room inside the candle to the left. So we call this an inside bar, right? We call this an inside bar. If we find an inside bar, we box it again from week to week. If we are in a bullish order block, we want price to violate it by going up, breaking outside. And if price breaks outside, we buy. So let's assume let's find that example, which we used one example earlier on. All right, so great, this. So let's say we were in a bullish order block and we see this inside bar. A breakout above it will signify reasons to want to buy. Without so many manipulations and drawing of so many things on our chart, keeping it short and stupidly simple. And these candlestick patterns I've mentioned is enough to make us, using the 1:3 asymmetric risk reward ratio, we can do wonders trading, right? I'll be showing us examples of what okay, sorry, before then, GU, let's look at what happened to GU today. Okay, so if we check GU, let's take out all the objects here. GU today, I mentioned somebody posted GU and made some pips from it. This is GU, right? Price traded back into this order block. Price traded back into this order block. And we're buyers. Price gave us a bearish order block, right? Or in this case, yeah, a bearish order block. Price traded back into it, and then we sold. If we go down to 15 minutes, let's box this up and see how we would have gotten our entry of the 15 minutes. Let's see how would have gotten an entry of the 15 minutes from all we've been discussing since Monday. So down to 15 minutes on GU, down to 15 minutes on GU. Sorry, let me, yeah, I want to use this template. All right, so this is GU, same area, 15 minutes. I mentioned 2 days ago that there are some conditions I want us to apply to this thing to make it easier. And one of it is kill zones, right? If you trade during the kill zones, you are most likely, not all of the time, you are most likely to avoid some fake outs, because the fake outs will happen most times during the kill zones, and then you get your entry after the fake outs have happened. So if you trade BTMM, they have what they call vector moves. Vector moves. That is the false move, the 3 strong push, to the upside, and it makes it look like it has to be 3 candles. Sometimes you see 5 candles, but we still find a way of explaining it like it is 3. 5 becomes 3 when we're trying to explain it. I understand those things. So here we are, price traded into this order block, right? This is today. Price traded into the order block, and when price traded into the order block right in this zone, we would be looking for reasons to sell. We will be looking for reasons to sell in our Q zones. Let me see if I have something that will give us clear. Okay, great. If I go down to 15 minutes here, we will have our Q zones. Very good, very good. So from the red line down there, the red bar down there, that's our London Q zone. And the green bar here is our New York Q zone. So right in our London Q zone, we have our entry. If you trade using LSP, this will be your entry. The last bearish candle responsible for that high happens to be this. Price broke beneath it, made a retest, and then we sold. Your stop loss would have been ATR above or spread times 2 above. That would have been your entry, and would have been looking for, if you want to use the asymmetric risk reward ratio, 3, and it doesn't have to be 1:3. You don't have to follow what we're doing. That was just an example. If you want to do 1:2, 1:1, it's all your, none of us, I'm not a Forex guru, just discussing my mind, my thoughts with you guys, right? This thing actually went 1:4, like Chris said, 1:4, right? If you use LSV for your entry, that is how you'd have taken the trade. If you use the candlestick patterns I've just mentioned to you guys, then you might have gotten an entry somewhere. This was like an engulfing candle. Somehow, when price traded back into this point, you would have gotten an entry. You would have gotten stopped out of that trade. No worries. We said if we are stopped out, we look for an entry again, because we are in a bearish order block. We anticipate that price will eventually sell. So that if you are taking this entry, you most likely have missed out. And I'll give us 2 ways you can take that entry. So let's say we have this that looks like a bearish engulfing. You mark it up, and what we said, 2 ways to trade it. Once price at the close of that bearish engulfing, you can take your sell. In which case this would have given us, watch this. This would have given us just maybe 2R before pulling back. Or you wait for price to come back to touch your order block in 15 minutes, and in which case it violated it. So this would have been a losing trade. And we are not afraid to lose, guys. We are not afraid to lose. We saw yesterday that we could, out of 25 trades, we could lose, we could have a 34% win rate and still grow the account by 50%. We saw that, right? We had a small group that lasted for about 2 months last year where we introduced a strategy called slingshot, and guys went to do back test. We had instances where there were 5 back-to-back losses, and in 1 year almost every pair gave us over 50% growth in account. Just one pair, right? Phenomenal. So here we lost out of the trade. What candlestick pattern can we see here? We can see this that looks like an inside bar, right? We see this inside bar. This is a bullish and this is a bearish candle inside the bullish candle. We simply mark it up. Price closes beneath it. Boom, we are in for a sell, and that is it. These are ways you can take your trade without too many complexities. And please, once you are in a daily order block and you are patient enough to wait for price to get to our premium point of entry, if you are somebody who loves using tight stop loss and it takes you out, if it gives you another entry, go back in again. Let's stop this attitude of sabotaging ourselves. That I was in a Telegram. I read a post from a Telegram group today, and we're supposed to take a trade. I think it was Litecoin or something. And the guy said, "Why is it that big moves happen when I'm baiting or when I'm sleeping?" Right? And I just remembered my own trading part too. Most times when I have 1 or 2 losing trades, I get dejected, I get frustrated, I lose my appetite, I lose my sleep, I'll be turning around in my bed. And when I come back like 10 hours later and look at the chart has gone, the price has gone very far, it has delivered so much pips, but I'm not there. Why? Because I'm sulking because I lost once or twice. It gave me a perfect entry to regain back my pips, but I'm not there. Right, because I feel my psychology has been affected. So yes, I told us that I'll be showing you guys some things. I'll quickly do that, and if we have time, we'll go back. So I mentioned that from next month or thereabout, we might be looking at price from a different angle, where we just want to have a line on our chart, and with that line and with setting. Can you please show a clearer example of an order block? We did that for like 2 days. So guys, look up here. This is AUD card. This is AUD card. You guys will notice that we'll be explaining this to you guys. Very simple, right? With this method, you have your take profits already predefined, right? This is take profit 1, this take profit 2, this take profit 3, this take profit 4, right? Predefined. See how price bounced off exactly at that level, right? This is like a bearish engulfing. Based on what I explained, some of you might see this as a tweezer, no problem. Notice that how the top and the bottom was fibbed in using a special fib that you guys will get to know very soon. Notice this upper part, this lightly shaded area, which we call the preferred entry, right? Notice how price went straight to that preferred entry, and notice how price dropped straight to TP4. You can trade with just a line on your chart, and you tell yourself, if price goes above this, I'll buy. If price comes beneath this, I'll sell. Not minding whether FOMC or whatever is going to happen. Because when we do back tests, we don't check if what moved price when we're doing back tests is actually news. Why do we run away from them? Right? Perfect example. Price went straight. This blue zone, everything in this blue zone is our sell area. And if you remember order blocks, this last bullish candle that was traded through is an order block. And we said when price comes back into the order block, we're looking for reasons to sell. Now we are going to refine it even better, right, when we start the new process. And we'll have what we call a preferred entry zone. And when price comes into this region, we will be buying, we will be selling. If price closes above this region, and say, for instance, we had a reason to sell and price closes above and we lose the trade, we will enter for a buy upon a retest of that zone and claim back our money. Brokers are no longer permitted to take money from SimplyPips members. If they take any money we gave them an advance, we will go back and take it back with interest. Right? Here is another example. This same AUD card, if you want to use the source breaker and blah, blah, blah concept, right? You would have seen this bullish candle as our source. We would have seen this bearish candle as our breaker, and price traded into source breaker and we're selling. I'm just trying to let you guys know that everything we've been discussing is not different from what you watch on YouTube. If you've watched those 22 videos on YouTube, we just discovered that people find it difficult to put all the information, 22 videos, a lot of informations, right? We are narrowing it down and removing so many things. We remove TDI, we remove so many things, we narrow it down. You take your trade, if you hit your stop loss, give you another entry, take it again. And now by next week, by next month or thereabout, we will be telling you how if it hits your stop loss and moves and shows you a sign, you can go back in the reverse direction and make back your money instantly, right? I'm sure you guys will see examples. Here, notice this. Notice that this is a bullish engulfing candle, right? Bullish engulfing candle. Notice with our special fib, which you get to learn, we have this deep blue zone that looks like that. And I told you that this deep blue zone will be our buy zone, right? Notice price came straight to what we call our preferred entry and bought. Notice that price closed beneath this zone. So let's say we took a stop loss, right? Notice that price retraced back to that zone and would have entered and made back our money. Are you guys seeing this? Notice we would have been looking at reasons to buy. Let's say we got an LSB for one reason or the other, and price violated and hit our stop loss. Once price closes beneath our entry, we will go in the opposite direction now at our preferred entry and take the trade down and make back our money. Brokers are not allowed to take money again from us. If you follow the rules, they are not allowed in 2021 and going forward, right? And we're going to make it very simple because we're just using a line. No complexities, no drawing of so many things. Simple as that. Simple as I've explained it. Let's see more examples. Oh, here now we see another inside bar. If you've been following me, this is another wonderful inside bar, right? What do we say we do when price broke beneath our inside bar? Notice I'm doing everything here on 4 hours. You can use this method on any time frame, inclusive of 1 minute. If you do this on 1 minute, what it means is that your stop loss could be as small as 3 pips. And when price moves 9 pips, you've done 1:3 already. It will take some getting used to, but the rules are pretty simple, right? So notice what I explained. Price broke beneath, boom. We said we'll take our entry, and price went from TP1, TP2. Remember, these lightly shaded areas are TP. Price went from TP1, TP2 straight. We will still leave this special fib on our chart. We'll leave it on our chart. And in fact, we'll have another one drawn on this bullish engulfing. And when price trades back to the bullish engulfing here, we will buy. When price trades back to this special entry area here, which we call the preferred entry, we'll be looking for reasons to sell. Notice something, price closed above. Once price closed above, our bias will turn to buy. Then price closed beneath, our bias changes back to sell. The market is trapped. If they go up, we'll buy with them. If they come down, we'll sell with them. Remember what we explained yesterday. We said with this method, our strategy is this: buy when the market is buying. How will you know the market is buying? When it starts buying. When will you stop buying? When the market starts selling. How will you know the market is selling? When they actually start selling. Simple rules. Price broke above, we'll change our bias to buys. If we get an LSB for a buy, we'll take it. Price closed beneath. When I say beneath, I'm talking about these two lines. Price came and closed beneath. Now we are no longer buyers, we are now sellers. Any other person in the world can be saying anything. When price came into our zone, gave us LSB, we sold. Straight, TP. Straight to TP. Here again, we have another zone. Price traded back into it. Other block, we sell again. The market is trapped. Wherever they go, we are there. We are like an ever-present eye watching their moves. And we'll do that having just one line on our chart, right? Here again, you have a wonderful one. This is GBP USD, GBP AUD, and this on the daily, right? Remember our bearish engulfing again. Price trades into it, and we have that zone we call the preferred entry, sweetly sitting there. See how price came, gave an LSB, or you could go down to your 15 minutes, your 5 minutes. You either see an LSB, or you see a tweezer, or you see tweezer or railroad, or you see a pin bar, or you see whatever. We'll find something here to give us an entry. We will find something. If you look at price action, it's going to be difficult for you not to find any of those 5 candlesticks pattern I've mentioned. So your basic concern will be focusing on just 3 pairs. If they move, we move. If they stall, we stall. If they consolidate, we get burnt once or twice. When they eventually move, we're there waiting for them and we are moving along with them. That is what this strategy will do to us. That is what this strategy will do to us. Price came and boom, that was a selling trade, right? Show you some more examples and wrap it up. Here we have again that same GBP AUD, right? Remember this was GBP AUD on the daily. Here is GBP AUD on 4 hours. Believe it or not, this is that same bearish engulfing that was marked up. Here it is. See the way price came precisely to our preferred entry and dropped straight to TP1. It dropped straight to TP1 and it gave us 140 pips. Straight to TP1. Our TP1 is known. We don't need to look at the left-hand side of the screen to get our TP1. If they are equal lows, they are on their own. Right? This is GBP AUD. That same GBP AUD, guys. And see the way price respected again. Respected that preferred entry. This is what you guys will be getting to learn from next month, right? And switch down to the downside. Very simple rules. You know, you would show you exactly where to wait for price. And when price does the opposite, let me say, I think I have an example of where price does the opposite. Okay, all these are examples of how we take our trades. All right, so let's look at this. Let's look at this. This is on the daily GBP card, and we have this is the bullish engulfing, right? We have it marked up. Watch this. Price traded back straight into our preferred entry for a buy, and we would have been in for a buy. This is a daily. This is a daily candle, so we would have won all these pips for this day. It came back again here the next day and would have entered again for a buy. Then eventually it broke beneath it. Once it broke beneath it, our bias is now a sell. Price traded to this place. We would have been seeking for a sell. If it gave us an LSB, we'll take it. If there is no LSB, we are not in the trade. and finally price broke above. Now we are no longer selling. Now we are thinking we should be buying. But price came back again and closed beneath. Watch, guys. We might have gotten we wouldn't have gotten an LSB for a buy here, right? Now we are in our bias is for a sell. Price pushed here, gave us an LSB. Notice for some days it's been consolidating. We will be waiting for them when they make their move. We will be there. They gave us the LSB and drop TP1, TP2, TP3, TP4. If you have your calculator up, 1.696 and the entry is 1.73, well over how many pips, right? This is the power of simple few candlestick patterns without complications, right? Last example I'll be showing you guys. Again, see this. On the daily time frame, you have USD JPY. This is a bearish engulfing pattern. You have this marked up. Price traded back. Watch this. Price traded back into this region, and we'll be looking for reasons to sell. First, we have a sell here, right? We sold down. Then price traded back again. It sold. Price pushed up, gave an LSB, sold down to this place, take profit for. Here we would have had our own, another zone drawn up, right? When price got back to this level, we would have had reasons to buy, right? So I'm just doing this to let you know that what we have in stock for you guys is phenomenal. Just by using candlestick patterns, we are not bothered about certain things. When you try to count levels, sometimes it's difficult to count the levels because you mark up a place and call it level 1, and after a while, like price pushes up a little, then you change your box again, then price pushes, then later on you're thinking, is this a reset? All that is going to be thrown out the window. We're going to be using simple candlestick patterns that a 10-year-old and a 9-year-old can understand, recognize, and can deal with, right? And the tools are going to be very simple. It will be on Trading. TradingView is a free site that you can go to, and it's going to be done in such a way that it's going to send an alert straight to your phone when certain things have happened. You just whip off your phone, check to see if the conditions are met, and pull the trigger, right? Let me quickly read the comments before we begin to put some finishing touches to all this. Sorry, just a minute. Let me go back up a little. The candlestick patterns, don't worry, we'll explain it. I just gave us the candlestick patterns. I think I have a video on YouTube that explains the candlestick pattern. Please drop SimplyPips group link. Somebody please help me drop. Just search for Simply-Pips, Simply-Pips on Telegram at SimplyPips. You find it there. Somebody can help me drop the link. Then if it's on YouTube, just type SimplyPips one word, you'll find it. What's LSB again? It's just breaking market structure. LSB is simply breaking market structure. And I'll quickly explain that before we move on. So notice price has been creating high, low, high, low, high, low, high. This was the last sell candle. This was the last sell candle before this high. When price breaks it, we say that the last step has been broken. Remember, price is supposed to be making high, low, high, low, high. When it makes a low, we anticipate that it should create a new high. If for any reason price refuses to create a new high, but rather creates a new low, then that up structure has been broken because the last step was broken. That's LSB. So people call it break in market structure, shift in market structure. Whatever the name is given, you can even design your own name. Just use it rightly, right? That's what we call LSB, right? To differentiate between higher time frame. In the higher time frame, we say break in market structure. In the lower time frame, we call it LSB, just so we can differentiate. So when I'm saying LSB, you just know that I'm talking about 15 minutes, 5 minutes. When I say break in market structure, you know I'm talking about higher time frame, but they're basically the same thing, right? Break, yeah, thank you guys. Please, I wrote only 4 of the candle pattern, namely engulfing, railroad, pin bar, inside bar. Yes, I said that pin bar has the same characteristics with a doji. So the doji, the pin bar, and the railroad, we treat them the same way. We're waiting for price to break. And again, we have an example right in front of the screen. You could have marked this up as a tweezer or railroad. When you mark it up, what we are waiting to see is price to break. There are some times that when you mark up this thing, candles will just be dancing like this. We are not interested. We want to see it break out. They should tell us where they're going to. If they break out above, we are buying. If it pushes back and come and break beneath, oh, sorry, we've lost, we'll enter and sell with them. We'll get back our money. We will get back our money. They can't take it and go scot-free, right? So let's move on. What is the name of the book for candlestick? It's called Candlestick Bible. Does this strategy work on? It works on all time frame, guys. All time frame. But remember, let's not lose focus of what we did Monday to Tuesday. Monday to Tuesday, we said trade strictly higher time frame. If you are new, if you are an old hands, you most likely would have learned like 24 trading strategies, right? So even if I tell you stick to the higher time frame, you won't. You won't. Most people won't take to this advice until they, like Mark Douglas said, until they are broken. They've lost everything, then they will say, yeah, I'm ready to do whatever it takes now, right? But for those of you that are new, please trade from the daily and weekly order block. You will not be trading as often as every other person, but you will know specifically what you are supposed to do. You will be looking for only sells if you're in a bearish order block, and you'll be looking for only buys if you're in a bullish order block. If you buy and it's violated and it gives you another buy signal, go in again and recover your money, right? So it works on every time frame. What is the logic behind the lines? Whoosh, don't worry. When we start, you see the logic behind the lines. They have very, very simple rules, strict but simple rules. Strict in the sense that you don't just go applying them everywhere in the chart, right? But I can tell you for free, if you apply it anywhere in the chart, I have a belief that you'll still be profitable, right? Let me call up MT4 and give you an example of what I mean. If you call up MT4, and let's say we go to H1, right? And let's start from this bottom here. Now notice we're not doing anything magical. Let's start from the bottom here. If I have this inside bar, when price breaks above it, I know I am buying. Then here I have something that looks like a tweezer. You are looking for a nameable candlestick pattern. This looks like a bullish engulfing first, right? You look for the one with the widest range, you box it up week to week of the engulfing, right? Week to week. You are waiting for price to close above. Price closed above, you're a buyer, right? Here you have what? A pin bar. Box out your pin bar. Price came, didn't close. Price closed above. You're a buyer. I mean, it's as you can use it, but so that you will not be using it just anywhere. We have some refined rules, very simple 1, 2, 3, 4 rules that you would know. And when price does the opposite, you know. So let's look at this. We have this, a bullish engulfing. You mark it up. Price comes back, you buy. Right? Price breaks beneath, you sell. And now you have a bearish engulfing. Price break above, you are buying. You are supposed to sell, but when price broke above it, you enter again and recover back your money. The strategy is simple and straightforward, guys. Like, somebody say, please let me know this week when it is time. This is just an appetizer. Bishop, the group was filled up before I came in. Oh, sorry for your loss. Sorry about that. guys, don't go and apply what I'm showing you now. This just to show you what we want to do next week. So all the questions on the Fibonacci, leave it. When we start, we will have freebies for everybody, right? And we'll most likely have a 500 capacity Zoom. So go call your friends to join SimplyPips, right? It's happening. But I am saying, and maybe I should streamline this now, that if you are trading off the daily, I need somebody to give me a pair. Just mention one pair, guys, so that it doesn't look like we're cherry picking. Can somebody mention a pair? Can somebody mention a pair, a single pair? Anybody? Wow, 30 messages. Yeah, somebody say, yeah, the candlestick patterns, the slingshot explain. Thanks for dropping Adebayo, or thanks for dropping the link. Who will be after New York? Okay, I will explain that. Yesterday, we were trying to tell us something about when to come to our chart to avoid eyes always on the screen. Yes, you see, if the week ends, we check the weekly time frame for an order block. You mentioned that we should on daily time frame, you come in at New York close. How can we avoid always staying on the phone? Yeah, always staying on the phone is just psychology, right? You don't need to be on the phone all of the time, and I explained it. Get Trading View, the free package, and there's an indicator you can apply to your MT4. And when you draw a line on the MT4, if price approaches that line, it will send a push notification to your phone. Right? You just come to tools here, go to options, click on notification. Notice I have notifications here, right? I have notification. So if price gets to that line on mine, it's going to send me something like an SMS straight to my MT4. I don't need to sit down on my screen to be looking at it. It will send it to me that price has gotten to that line. And then I can now go back and start waiting for my LSB. In that case, I check my phone every 15 minutes or every 30 minutes, right? If for those of you that will be joining the SimplyPips fostering program, we have automated all of this. We have something that will tell you when the LSB finally occurs. It will tell you LSB has occurred. It will send the screenshot to you. You will see it. Sorry for you guys that are not Nigerians. For Nigerians, you will see it with your koro eyes that the LSB has occurred. You will see it, right? If you want to trade divergence, you tell you divergence has occurred somewhere and an LSB has also occurred. This is good. You can clearly see the LSB, right? So what we're trying to do is simplify everything. This is the LSB, right? Sorry. This is the LSB. Price broke, it sent an alert instantly that LSB has been broken. So at a point in your trading career, you want to go beyond doing everything manually. You want to go beyond it, right? Yeah, the fib will be taught later on. Sheesh, 56 messages. I doubt if I can read everything tonight. Okay, somebody mentioned, I said drop a chat. Somebody mentioned UCHEF. Whoosh, prof, all these chef pairs. Anyway, let's go to UCHEF. So it doesn't look like we're cherry picking. If you go to UCHEF and go to
someone wants to be trading USD ZAR.
USD ZAR. Guys, you don't need all of those things. Many of us here are disciples of Michael. Michael trades only the cable, GU and EU, and to the best of our knowledge, he's very profitable, right? So you don't even need so many things. Oh, look at this example. This is a daily. This is a daily bullish order block, right? So we would have been looking for reasons to buy here. Notice how price violated our buy. With the new system we're showing you guys, when price closes beneath, I showed you guys here, when price closes beneath, like in this case, we're looking for buy. When price closes beneath, we don't wait. We don't say, oh, price has closed beneath, we've lost the trade. We will go back in and recover our money. So watch this. Price, watch this. Price closed beneath this zone. It came back, we enter and recover back our money. Right? Simple as ABC. Exactly the same thing that happened here. Price closed beneath the preferred entry, would have been somewhere there. This week was our re-entry. Instead of the buy, we entered for a sell, and this is it. We've recovered back our money. Right? Candlestick patterns. Here you see the bearish engulfing. Price traded back into it. Notice how this did not close. This wouldn't have closed. This wouldn't have closed above our preferred entry, and boom, sell. Go back again, sell. Any pair, any time frame. If you want to check Bitcoin, and I hope some of you actually enjoyed the run on Bitcoin. I hope some of you actually enjoyed it. Let's look at Bitcoin. We'll soon round up now. I'll respond to all of the questions because respond to all of the questions here. I don't care where you've gone to learn trading before. If you can make it to the fostering class, be there. And those of you here, if you can make it to the master class, be there. I need to call up BTC. My network is a bit slow. While it's loading, I'll read your comments and begin to call it a wrap. Using upper zones, where do you place stop? I just explained it. I just explained where your stop loss will be. Right? On a lower time frame, you will find a refinement for your entry. It's either you get a pin bar, you get a railroad, you get all of those things happening at some point, and then you take your trade. The challenge most times is we don't know where we are in the market, right? When you don't know where you are in the market, you wake up in the morning and somebody says buy GU. GU is buying. You jump in. And I gave a word of caution or a word of advice on Monday. I said, if you still have 15, 20, 60 Telegram groups, delete them all, narrow it down to 3. Most of the people telling you what the market will do in those Telegram group, they just started trading last month. Some of them can't tell you what will happen the next minute in their personal life, or they can't tell you if Arsenal will be relegated or if they'll finally make top 5. But they're trying to predict what over 10 million people will do on GU. You know, so narrow down, get just like 2 or 3 that teaches the same thing. Unfortunately, I don't know what's happening to TradingView. Is not calling on BTC. I wanted you guys to see how clean BTC Bitcoin was using this strategy. Just daily order blocks, daily, weekly order blocks. You don't need anything too fanciful, right? Well, it doesn't seem to be coming up. Right, so I'll end up by, if it doesn't come up, then let's see if FTMO will come up. So what we try to do in the fostering class is this, and I'll explain. When you trade your $500 account, you put yourself under undue pressure to, well, on an average, if you have a family of 2 or 3, or let's say you're even a student and you want to make money off trading, if you make 10% of this, you will just have made $50. And I tell you guys, any trader that can do 10% even in a year, I'm not talking about a day or a week, is a good trader. Is a good trader, right? Now, but what will you do with $50? So I tell guys, after passing through the fostering class and having some form of mastery of our methods, we advise you go get an FTMO account. In fact, in the fostering class, what we do is that after taking you through 3 strategies, we'll show you 3 strategies, and each will take 2 weeks, right? So 6 weeks looking at strategies. We expect that you should be actively involved in each of these strategies. When you've done that, what it does is that at the end of that 6 weeks period, you would have made up your mind if you like any of the strategies we teach, or if you prefer a strategy you've been using before. Many of our students, after coming, they go back to dust off a strategy they learned 2 years ago, because we make them understand at the end of the day that the strategy might not have been wrong, their mindset was wrong. So after putting the mindset right, they just discover that I think I'm still in love with BTMM. We don't teach BTMM. I'm still in love with London breakout. We don't teach London breakout. And they go pick up that strategy, right? So, and you guys also need to know something. You need to know something, that just as there are many temperaments, we have melancholy, we have the sanguine, we have the phlegmatic, we have the choleric. If your mentor is a melancholy and he does well with London breakout strategy, and you're a phlegmatic, there's every likelihood that you will understand everything he's saying, but you will lack the attitudinal psychology to carry out London breakout strategy with high precision, right? So very fundamentally, what we do in the first 6 weeks in the fostering program is help you discover who you are in terms of your personality. Then you can, we don't do the second part for you. You can now pick a strategy that meets your personality. For instance, there are some guys that they want a strategy where an arrow points out and tell them sell. Naturally, they don't like taking responsibility. There are people who are good followers. They can follow you everywhere. I'll talk about FTMO, don't worry. They can follow you anywhere. They're good followers, right? So those guys find it difficult to reach conclusions on their own. Now, it's a psychological block. It can hardly be, it can be broken, but it's a lot of work. And unfortunately, in SimplyPips, we are not psychologists. So rather than hit our head forcefully against the wall, since you are somebody that don't like taking decisions, or you are slow in taking forceful decisions, we will show you something that we just tell you: when you see this arrow, buy. When you see this arrow, sell. And that arrow would have met our daily order block and price traced back into 50%, and an LSB has happened, sell. Simple. If you want to see an arrow to sell and you're that kind of person, maybe because you're phlegmatic, well, here you are. So when we show you in 6 weeks this strategy, right? When we show you in 6 weeks this strategy, we now take you through a process of psychology mindset development. Then we take you through what we call portfolio and risk management, right? Where you learn, and I just gave you an example of the 1:3 risk reward ratio, asymmetric risk reward ratio, right? So we show you things that can make even a seemingly poor win rate, but with a strategy with an edge, win. So we'll show you that. And after that, we'll throw you to the lion's den. After that, we throw you to the lion's den. And what that means is that we will take you through a 30 days. Unfortunately or fortunately for the present class, they will be having a 45 days because they started just before the Christmas holiday. We'll be taking you through a 30 days trading challenge. And that is why we don't call our method mentoring. What most people do when they say mentoring is that they just teach you the rules to their strategies and they tell you go to the market and make money. But you and I know that understanding the rules of a strategy is different from implementing that strategy. Because you know M and W does not mean you are going to be profitable. Applying M and W is a different kettle of fish from identifying M and W. And if you are a year or lower in trading, you might not understand what I'm saying. But the guys who have learned 23 strategies, they understand what I'm saying. Right? So we hope we take you through a 30 days trading challenge. In that trading challenge, the rules will mirror FTMO. The rules will mirror FTMO rules. In other words, you can't lose more than 5% in a day. You can't lose 10% in total. If you lose 10% in total, you will be disqualified completely. Right? I prefer FTMO to Blue FX. FTMO has 1:100 leverage. Blue FX has 1:3. There's a big difference between 1:100 and 1:3, guys. Right? So what we do is that during these 30 days, we apply pressure on you. And what is the pressure? Everybody in your class can see your results. So if you were somebody within the 6 days, you always like flashing your results. Oh, I just made 20 pips here. Oh, I just made 100 pips here. We'll be quiet. We'll praise you. But don't worry. There's a 30 days competition coming. And you'll be there with the remaining people. And usually what happens during those times is that people stop posting their wins and they start complaining about the ones that hit stop loss, right? We'll start playing psychology. You start trying to defend yourself because everybody can see your trade now. Everybody can see your trade. Now, because everybody can see your trade, what it does is that some people find it difficult to press buy on their MT4. Just to press buy. They see it. To press buy, you are scared that I don't want to lose so that people will not laugh at me. But you have to break that block, mental blockade, to be a profitable trader. You have to break that mental blockade. So we put you under pressure because if you can master your emotions and trade according to your trade plan, within 30 days, there's every likelihood that it will begin to get enshrined and ingrained in your mind, and it will begin to become like an attitude. You notice that a trader cannot, traders are made. You don't become a trader. You don't learn to be a trader. You become a trader. You become. The process, that word become, is a process. So when I see people say we are doing mentorship, you just come and in 3 weeks they teach you a strategy and they say go and make money. You can't make money learning. You guys here have learned several strategies. How much have you made? So the fostering program is like a breeding ground. At the end, many people leave the fostering program disappointed, frustrated. But 1 month later, they come back and say, you guys did something wonderful. Now I know where my weakness is and I'm working on it. And once you're a member of our fostering program, you remain a member for life. If there's another new set coming and you want to join them, join them. You don't have to pay. If there's another competition happening and you want to join the competition, join it. You don't have to pay. You only graduate when you leave on your own. After the 30 days, we now go through your trading results and we check all the guys that broke the rules, all the guys that kept to the rules. We check and we now give you specialized guidance as individuals, what we think you need to do. Once that has been done, the program is gradually coming to a close. The last set, after the first competition, they insisted they wanted another competition and we initiated another competition for them. And I'm proud to tell you that we have members that are already trading FTMO. So what FTMO does is that they give you 30 days to make 10% on buckets of accounts. For example, they have 10,000, they have 25,000, they have 50,000, they have $100,000 account. And they'll give you 30 days to make 10%. When you clear this 10% in 30 days and you guys know that the freebies we've given already can make you clear 10% in 30 days. If you use your asymmetric risk reward ratio, you trade straight from weekly and daily order block, you will have losers. Prof did a very wonderful work by showing us that Excel. If you are able to take 25 trades at least, you should most likely clear your 10%. Right? Now, once this has been done, they will now give you 60 days to make 5%. So for me, the first one is called the challenge. The second one is called the verification. For me, this verification is 4 times easier. Why? They are giving me 60 days to make half of my previous target. Now, if you clear this in 10 days, you go straight into this. You don't have to wait for the end of the 30 days. If you also clear this in 10 days, it means you've done both in 30 days. After this has happened, you now go through a process of onboarding. Usually take about a week or two. They get your ID card and all of those and blah, blah, blah. And they will now give you live money to trade with. If you did your challenge and verification on a 50K account, you'll be given a live account of 50K. If you did it on a 10K account, you'll be given a live account of 10K. If you do it on 100K, you begin a live account of 100K. So let's say you were very bold and you went for a 100K account. Unlike BlowFX, you are not tied to any profit. If you make 1% at the end of 1 month, they will share this 1% with you. You, right? Let me clear this. You will take 70%. So this is FTMO. All right, this is you rather. You are here, right? So you will take 70%. FTMO will take 30%. Very interesting, very sweet. So let's say you are trading 100K, and in the first month, you made only 5%. 5% is $5,000. You'll be walking home with $3,500. And FTMO will take $1,500. And that is not just all. Before you join the competition, you pay a registration fee. The registration fee is in hierarchy. So the higher the account you want to be tested on, the higher the registration fee. Upon your first withdrawal, whatever you paid as your registration fee will be refunded to you. So let's say you paid £300. You'll be having $3,500 plus £300 paid to you, usually within the first 2 weeks, right? We tell our students, or people who call themselves, we tell our friends who join the fostering program, that if your dad isn't rich and you don't have a $100,000 account to play with, save up and go through the challenge, go through the trial, go and pass your FTMO. You can start with a 10K account. You can start with a 50K account, right? And you can start, imagine if you do a 100K account, and let's say you do 5% every month for 12 months. I want to bring out my calculator here. Usually I target 10%, but let's say you do 5%. So if you do 5% every month for 12 months, you invariably have done 60%, right? If you do 60%, that will be how much? $60,000, right? This is best case scenario, right? Even I have not done that, but this is best case scenario. So let's say you do 5%, 5%, 5%. Some months will be somehow and the likes. But let's say you do that. Let's say you do. Sorry, I'm taking your time. I was going to round up. This is the last day, and I need you guys to understand why we're doing all of this. So you have a 6. Let's say you make 5%, so you've done 60. Hey, 60. Yeah. At the end of the year, you would have been withdrawing your money, but I just want to do a cumulative. At the end of the year, you would have had 42K at the end of the year. If you're in Nigeria, multiply this amount by 450. That's what you could have earned at the end of the year. divide it by 12 to give you an average of what you take. Not bad. Not bad for a trader. I can tell you less than 1% of Nigerians earn this amount per month. Less than 1%, right? So guys, that's what FTM is all about. That is what we will be doing with you guys this year. We have the fostering class coming up in February. We have the new partnership that we're bringing about, a new way of looking at trading coming up in February or March, right? For those of you that are coming with me from the other side, we have a master class where I'll be teaching you how to trade stocks. We'll be teaching you how to trade stock indices. We'll be teaching you how to look at crypto, right? All of these are things you can do. I want to appreciate you all for coming. I won't be able to take more questions, and I think we've given enough sauce for one day to call it a wrap for today. Call it a wrap for today. Let's see. Sorry, I'm looking for someone here. Hello, Prof. Are you still with us?
Yes.
What do you want to say about fostering class?
I think those that are in the waiting room, I've been seeing testimonies from the previous guys. So I don't think any of them should need any other testimonies. The only thing I can tell you guys is this: I consider myself to have had one of the best beginnings to trading, having Adam Koo, attending my first class with Adam Koo, because he was quite down to earth. But still, I can guarantee you that it's still nothing like what we've been trying to do with these guys. Seriously, it's still nothing like it. At least I know that he didn't. Nobody did any competition for me to try to get me to assimilate or to practice those things that we've been learning and what have you. Sorry for that. A thunderstorm just rolled in and everything. But yeah, still believe you guys can hear me. So those who can get in, please do. Forget the money. When I tell people, when I first started trading, I took all the money I had to go and pay for that. It was $200 and something dollars. In fact, it was a promo, because otherwise it was like $400 and something dollars, $799. That's what it was supposed to be for. But he was doing that. I think it was a Black Friday promo or something. I shall pay 200 and something. And so when we are charging 150, 200, whatever, it's nothing, seriously. If you can get in there, please get in there. You'll have access to so much more, apart from even the knowledge, some tools and other things that will really help you.
Someone is asking, what is the criteria for the fostering class?
Just make sure that you understand the basics of trading. So we are not going to be teaching you what is a PIP, how to use your MT4 and all those things. Don't come in here expecting to do that. So, but once you know the basics, you know how to buy, you know how to sell, you understand your orders and all those things. So we won't be teaching you buy limit and sell limit and all those things. Make sure you understand all those basics. I would just basically say, if you understand what is in what is it called? If you understand what is in baby pips, preschool and kindergarten, you are good to go.
Great.
So keep your time zones and all those the sessions. Nobody's going to come and start teaching you a New York session. Market opens by so and so time. Buy limit, sell limit, what's a PIP, and all those things. So once you are sure you've mastered that, you know those things, talk to me or Bishop. We might just ask you a few questions to be sure that you truly know. And that's so then you can go ahead. Once we give you the go ahead, you can go ahead and make payments. And when you are, and then get in. But please, if you are coming in, like I always tell the guys, the very first Zoom we have, please come in with a desire to become a professional trader, seriously. Because let's say anything we want to say. If we are not ready to do the work that is involved, it can't really help you.
Thank you so much, Prof. Thank you so much, Prof. So, guys, that's Prof. You get to know him better. Last thing I'll say, when we get back to the Telegram now, go to your chat, right? I won't baby feed anybody. Go to your chat. What I expected after teaching other blog on Monday was I expected everybody to go to their chat and go back to January 2019 or 2020 and start marking up other blocks on the daily and weekly and see the way price respected them. Then you get we call that back testing, right? So mark it up, go down to 15 minutes, see how you'd have taken your entry. Mark it up, go down again to 15 minutes on that same time, see how you'd have taken your entry. There is no reason why we shouldn't be doing that. Do that, drop your chart in the chat box. I may not have to answer all the questions. I want to reduce the time I spend on Telegram, right? I may not have to answer the questions. There are other guys there that can answer the question. Answer the questions, argue, build up yourself. It's a free community, and let's help one another. So, guys, thank you for coming. See you in the Telegram group. Bye-bye.